Welcome, everybody, to the Investing or Gambling Podcast. I am your host, Ileana Mike, and I'm here with my guest, Marco Marzocco.
Hey,
Hi, Marco. How you doing? Hey, Marco's
doing
been
well.
on.
Good to be back.
Yep, Marco's been on the show before, but we got a new and improved podcast. You'll be able to catch us on our new YouTube channel, and we've got a new editor, producer, and everything else. So we're getting ready to go real quick. The indices, Dow Jones Industrial Averages, 34,466, only up 19. The NASDAQ finally got over that hump of 14,023. And the S&P closed at an all-time high today, I believe, is at 4,239. We're going to get right to it, folks. Start talking about what happened today in the CPI, whether this is transitory, the Fed, the bonds. We're all kinds of stuff. We're getting ready to fly here. Marco, I'm going to introduce you, let you start off. We knew that we had a hot CPI number today. You seem to think that this is transitory. I suppose we can talk about that later in the show. Tell me what you're seeing in the market today. And, you know, I watched the market open today, up 300 points. Everything went great. And then all of a sudden I saw that big swoop down. And something told me that might have been some short covering. The reason why I say that is because everybody knew this number was going to be hot. And I knew it was going to be hot. It was actually hotter than I thought it was. Now, yesterday, the market didn't do much of anything. And to me, it looked like everybody was shorted and they were buying puts on the S&P and probably puts on the DJ. Also, I think that there was a lot of short covering in the TLT today too, because they thought maybe if it was a hot number that 10-year might boost up to 1.6. Was trading yesterday, I believe 153. And if I'm not mistaken, they thought
the bond
maybe
shorts have gotten destroyed again.
Yes.
Exactly.
Now, I don't know how much of this was short. And I do think that when I'm seeing on stock twits and I'm seeing these people talk about, well, you know, we're going the bond market. Why are people buying bonds? I believe some of it was short, but there's also an underlining thing. And I know we've argued about this before, whether the bond market's right or not. Why are people, you know, if we see lower yields, I don't think this is a good thing, because that says something about the underlying economy not being as good as it is, or in the future will start to calm down. Your go.
So I can answer that very directly in just the fact that there are real money accounts. And when I say real money accounts, I'm talking about the institutional accounts that manage 401k money, like the Fidelities, the BlackRocks, the Vanguards of the world.
Mm-hmm.
And they actually are mandated stock buyers, but they're also bond buyers. And along with them, you have the insurance companies of the world, the liability managers, the pension fund managers. Okay, they are mandated bond buyers. There is a genuine demand for bonds out there. So those are the guys that actually are out there buying bonds. And as yields, you know, whether the yields are going up or going down, they still have cash that they need to manage, and they are mandated, and they can only buy certain things. And Treasury securities happen to be one of those things. So the same way you have institutions that are buying stocks, you have institutions that are buying bonds. So that being said, we can actually tangibly explain why you see, yields going lower, because people are indeed out there buying bonds. Now, I wouldn't read anything, nefarious into it about, yields telling us something about going forward, that there's, we see something deflationary, or we see something that's bad that could happen in the future, and that's why yields are going down. Because really, it just literally is, there are more buyers than there are sellers. People like to make the argument that the bond market is smarter than the stock market.
We've argued that before.
This magical, reason why. And I completely disagree, because again, we have the most pedigreed market participants in both sides of in both equities and in stocks. They're getting the exact same level, quality of information that's out there. And if there was any legitimate advantage to one market or the other, it would get arbed out. And what I mean by arbed, I'm talking about arbitraged out. In other words, when somebody sees in the marketplace an anomaly that looks like it's kind of free money because there is some sort of advantage here, everybody looks to exploit it immediately and it goes away. So it could only exist, for short moments because everybody would look to exploit it and it would be gone. And
Right.
that's kind of along the lines of, a little bit like efficient market hypothesis, where essentially all information is known in the market and asset prices reflect everything that everybody knows. And I am a believer in that. Because I just think people are always looking to capitalize on it. People are always looking to make money, and they're
Right.
going to do they're going to do whatever it is they need to do to make money and to protect their clients and to do what they are mandated to do, which is the fiduciary responsibility of all these institutions, et cetera, et cetera. So back to, I think, what I think everybody wants to talk about, and the CPI print today was, well, what's going on with inflation and how is that going to reflect itself in financial assets? And I think it's important to look at inflation in two ways. There is the inflation that you and I as consumers experience in our everyday life.
Oh, my
where
wife,
we go and buy gas, you buy
chicken,
food,
beef,
tuition,
pork, you name
yeah.
it. It's
all of it's going up in price, right?
Everything.
We all know we're paying more for everything. Okay?
Everything.
We know that. Now, in theory, inflation is bad for bond prices. Inflation as a part of interest rates should be driving, nominal rates higher as the inflation component goes up. And so we're not seeing that. So we're not seeing inflation manifest itself in financial assets, but we are seeing it clearly in the real world.
But
So
are we not seeing it in equities also?
Well, yes, we have rising prices. Equities, yes, we are seeing inflation in asset prices in some of them and in commodity prices, but we are seeing it in bond prices because bond prices are going higher.
Right. The bond prices are actually going down. Bond prices are
going up.
Yields are coming down. Correct.
But if we were seeing inflation, if inflation was reflecting in financial assets, you should see those rates going higher in financial in interest rates, but we're not. So
that's my argument earlier, that if money is piling in to the bond market, and we also have money that is piling into equities and multiples are expanding. I mean, I know we talked about the inflation a little bit off air and we're going to continue to talk about it. I still think, you're right. Commodities can move up and down. All right. Silver, gold, pork, chicken, milk, you name it. They can move up and down. We've seen lumber come down about 30%. Now that may have been an overinflated type of thing that was basically
lumber was up huge.
It was up huge. It's down. It's not, where it was because there's demand for it. People are
there's demand, but I guess there is also a little quirk with the sawmills. We're holding up some stuff.
That goes back to the labor issue.
Other stuff, yeah, which goes to the labor issue.
Correct.
Go ahead.
And I also think that this is what's causing a lot of this is labor shortage, because when you don't have people in meatpacking houses and when you don't have people back to work and you have a supply chain problem, you can also have an inflationary problem. Am I on the same?
That is how it works. Absolutely. I don't know how much of that we're officially seeing in terms of driving up prices. I think commodities are up for various reasons. Like you said, there is definitely demand up there.
Yeah.
Labor costs are definitely going up. Selling costs are going up. I mean, costs are going up, and that's what we're experiencing as consumers. But again, it's not showing itself in the interest rate market, which lends itself actually to stock prices rising, which is something that I wanted to touch on, which was, how are people or how are asset prices going to react to rising interest rates? And this goes back to the tech sell-off that we saw a couple months ago when people were talking about rising rates.
Right.
And how that was going to crush technology earnings.
They were saying
they're very sensitive to rising.
Once the 10-year gets to 150, they said it's going to be destroyed.
Yes. So that's what people were saying. So what we're seeing today is almost the opposite. And what we're seeing today, and something that I tweeted about earlier this week, is really a sweet spot for equities, and where we see corporate earnings going up. So your future cash flows are actually going up, but the discount rate isn't going up with it. Even though inflation is up, interest rates, nominal interest rates, which include basically growth plus inflation,
right,
aren't rising.
No,
they're actually staying fairly stable, which is what we're seeing. And if you know, in some cases, they're actually coming down. So when you're looking at valuations going out, you would have expected to see earnings going up and interest rates going up, but we're not seeing interest rates go up. What I think we're seeing is earnings growth outpacing the growth in interest rates, which allows for actually basically higher earnings and a lower discount rate, which gives you higher equity prices. We can mathematically justify higher equity prices today because of the tame interest rate environment that we're in and the strong earnings growth that we're seeing. So this is actually somewhat unprecedented, and it is thanks to central banks and QE and the Fed and the ECB buying all the bonds that are out there in the world, and keeping interest rates low.
You got the Fed buying what, 120 billion a month or 80 billion a month or whatever?
If they keep doing that, which they will be doing for
a while,
indefinite future, equity prices are in a real sweet spot where, like I just said, we have rising earnings and rates are staying low, which is just a fantastic scenario for valuations.
I see what you're saying.
Multiple expansion, you can justify multiple expansion with lower rates. So when you take the narratives that people were using a few months ago with, rates are rising, multiples are going to contract, and tech stocks are going to sell off, none of that has materialized. What we've seen is interest rates stabilize and earnings grow. So we should be trading higher. So I think we're actually in a really good spot and could keep running from here. So what's the downside of the horrible situation that people like to talk about? Does the Fed lose control? Does the bond market spiral out of control and interest rates shoot up uncontrollably? I personally don't see that happening, because I think the Fed can still outgun any bond market participant. So what you would have to see is a genuine chaotic moment where financial markets actually do lose control, and it would be like the equivalent of the October 87 crash for stocks. You would have to see that in bonds. And I don't see it happening. Doesn't mean it can't happen, but I think you don't
think the Fed's behind the curve?
I don't. I think the Fed has done well. I think the Fed is actually in a really good spot right now, and I'm totally comfortable with what they're doing. I've given up on the whole moral hazard argument, right? Because that's just crying over spilt milk at this point. We've crossed the Rubicon. It's already done. We're already in.
So you're saying that the balance sheet,
have to accept it.
The Fed balance sheet at $8 trillion is going to continue to grow, is what you're trying to tell me?
I don't think it's not going to continue to grow at that pace, but they're also not going to unwind it. And it's just going to stay status quo. And maybe they do keep buying bonds in some sort of way. But there's other accounts out there that whenever you do see a backup in yields, you have all these liability managers, which are the insurance companies, who would love to get some higher yielding assets on their books so that they can manage the liabilities that they need to manage. So I think we're in a pretty good situation right now, to be perfectly honest with you.
Well, I'll agree with you on the perfect good situation for the time being. And the reason why I say the time being is we got earnings seasons coming up again in July here. I want to see another read on the CPI. All right. I agree with some of the transitory things that we're talking about.
Rental. Wait, let's touch real quick on the transitory stuff. So what did we see in the report today? It was used car prices.
Yep.
It was moving services.
Yep.
And it was other transportation categories, I think, like airline tickets and other travel services.
You're right.
Right.
The things that have
coming back.
All about the pent-up demand, basically. And the only reason why
and migration out of cities into the burbs, right? Those are all your moving services.
Correct.
Rental,
the used car market is definitely that's about the chip shortage.
Yeah.
The used car market is definitely about the chip shortage. because I've been to a dealership and there are no very few other than the high end, other than the Porsche, other than the Land Rovers, other than the BMWs. But you go to Ford, you go to Chevys, Dodge, anything like that, where the middle class are buying automobiles, there aren't any.
Okay.
I was there. I physically watched this in all three of them.
Yeah.
Now, I can understand the used cars going up because somebody comes in and like you said, your buddy paid up over sticker price for a brand new car because the guy's like, hey, if you don't want it,
I think it
somebody
was
else.
used. It was, it was used. It was used. He thought
Yeah.
he was.
Well,
he
if you
thought
don't
he
want
bought
it,
the top of
what
the used car market.
the salesman says, if you don't want it, somebody else behind you wants it. You're going to pay it up or not? I mean, that's basically it. So,
Yeah.
but the underlining thing that I have a problem with is people paying up for things like this. All right. I have a problem with people that don't know the value of something that will probably depreciate very shortly inside of the year after they bought it.
Yeah,
Now,
but
maybe
if you
they
need a
need
car,
it.
you need a car, right?
I get it. I get
You
it.
have a choice.
Well, maybe yes and no. I mean, I'm just saying. But, you know, I disagree with some of the transitory things you're saying. I understand the migration here with all these immigrants coming in and that they're taking over these, smaller paying jobs, and maybe a lot of restaurants are paying under the table.
Well, yeah, but
this,
no, migration, but migration in this part of the conversation is people leaving cities
Oh,
going
yeah.
to small
Right.
towns.
Correct.
Right. So that's
But-
driving that's driving the housing market, that's driving the used car market,
Right.
that's driving all of that.
But if you look at grocery stores like Kroger announced today that they're paying for they're paying almost $16 an hour to start. They're giving them $1,000 sign-on bonus if they stay on for so long. They're also paying for tuition if they go to school part-time or whatever. You're not going to tell me that this isn't going to affect the bottom line and profit margins of these companies?
Well, it's
I think
actually
it is.
not to tell you the truth, Mike. It's not going to be that bad because they're going to pass the price hikes onto the consumers.
I
So
see.
it's going to pass through.
So we are going to have inflation that's going to stay up there.
Way. So look, if wages are going up and cost and prices are going up, I'm okay with that. I'm okay, and it's almost like
So they're basically going to offset each other.
Or a rising tide lifts all boats, so it all goes up. And even just to go into the academics of this, in terms of valuing a stock, as inflation goes up, there's actually methodology out there that looks at a discounted cash flow method and says, you know what, as corporations raise their prices, that inflation flows through into their bottom lines, and we can account for that in actually lowering the discount rate to adjust for that inflation flow through. It's called inflation flow through. And I tweeted out an article that's written, actually, it's from 1989, and it's from guys that were quant guys and research guys from Solomon Brothers.
Right.
So these are legit academics and legit practitioners.
Okay.
And they laid out the reasons or the formula behind equity duration.
Right.
It's fantastic. And we can mathematically justify that inflation flows through into earnings and into a lower discount rate, and we can justify higher valuations.
Okay.
So, I mean, it's great stuff out there right now, in terms of, the situation that we have and how we can analyze it. So to your point, that's why I'm not afraid of inflation. And I think, I don't have a problem with people getting higher wages and that getting passed on to consumers, because honestly, and I almost feel like I'm taking a page out of Bernie Sanders' book. If people start making more money, I think that's a better thing. I want everybody to make as much money as possible.
But
right?
I do believe it's going to hurt certain companies in certain ways, because there are things that they just can't pass on.
Higher.
It's one thing to pass on. It's one thing to pass on food, because we all need that. It's one thing to say that your utilities are going up, because those are things that we can't stop. Okay. I can't go to a grocery store and say, lower your prices or I'm not buying. They go, yeah, you don't eat. Okay. I can't go to the gas station. I can't go to the gas station and say, I'm not buying your gas, pal, because it's too high. You know what he says?
That's a tax.
Then
Higher gas prices are bad. Yeah, I agree. All right. So certain inflation is tough.
But sooner or later, the guy that's making the $15 an hour at Dairy Queen, okay, that fills up his automobile, is going to say, you know what? it ain't worth it for me anymore, because now I'm not getting $15 an hour. I'm back down to 12 because it's costing me more to come to work. It's costing me more for childcare or whatever. I agree with you on certain things. I'm sorry, but I do believe that the Fed is behind the curve. All right. Now, maybe in the short term, and my theory will only play out in time, as will yours. And this is what I call a conversation. The reason why is because if that CPI number continues to go up, and we've had it now since about March, we've had a high March, April, and May number. June and July, I expect those to either hold, and if it holds, it's just as bad to me because it means nothing's changing. If they go down a little bit, depending on what those particular items are, like services and stuff, those are the inflation I call labor and everything. I just feel that the Fed has gone too far. Now, they don't have to per se raise rates because they've already said that they're not raising rates for the next 2 years. They've already committed to that. That's automatic. They'll never go back on it. Now, will they start tapering on their bond purchasing? That's the conundrum. That may start sooner than later. And our reason why is, again, we will follow the virus per se and see where it's going with the variants and everything else. But I do believe that we are never going to go back on lockdown. Never. We're never going to do it.
No, COVID's dead, but we're never going to a lockdown again. Either.
Right. Well, COVID will be with us for forever.
Yeah. Well, look, let's face it. It's a flu. If you're under 70, it's the flu.
You're under 70, it's the flu. And if you're over 70 and
just you got to take care. You
got to take care. Whatever you got to do, go get your shot, whatever. Yeah. It's risky.
But Mike, let me ask you this: what the Fed doesn't have the tools to contain inflation that we're seeing. The only thing they could do would be to basically wreck the financial markets by using their monetary tools, which is the only thing they can do, whether it's unwinding their balance sheet or raising the Fed funds rate, would be absolutely chaotic in financial markets.
So are you saying if they're
not going to do anything to rein in the cost of medical, of insurance, of housing prices, of,
the housing market's already cooled down. That was the first thing that's already dropped.
Actually, if Biden keeps getting rid of fracking licenses and
there goes your oil
keeps going up, the Fed can't do anything about that.
No, they can't
fight that.
No,
that's totally out of their control.
Well, then the only thing that'll destroy that is jobs, because you're gonna, I love how we talk about this climate change when the United States has put out less carbon in the last 10 years than we ever have. We ship more.
We're doing everything great.
We ship more coal to China than ever. We don't care about their smokestacks. All right.
China's the worst polluter in the world.
I know.
People have these conversations about greenhouse,
it's all bull. It's all bull. I heard a guy the other day.
It's all China. China's building new coal plants as we speak.
In one decade, in one century, from 1900 to 2000, the climate, it went up a degree. And the guy says to me, he says, it's probably going to go up another degree within 100 years, though. But that's only 2 degrees in 200 years. He said, anybody that thinks it's going to burn out, that we're going to get to 5 or 6, he says, it's all nuts. There's too many jobs.
It's totally nuts. It's
totally crazy. Well, we are going to have this discussion again shortly. And I like I said, I'm still on the sidelines with this. I just want to see some more data. Okay. And that's what I'm going to be watching for. I like what I'm seeing in my commodities. I own a lot of silver, and I believe the falling dollar is really, I think that's another thing to watch out for too. I think if we see the dollar fall even further, then maybe the Fed may have to do something to kind of keep it propped up. Real quick. What do you think about crypto before we get off here? Give me 5 minutes on crypto, and then we're going to let the show go.
Well, the first thing
Ooh,
I would
that
say
wasn't
about
very good.
crypto, the first thing that for me in crypto, and full disclosure, is that I've been dead wrong about it for an awful long time. I'm a believer of technology, of blockchain technology, and some other things about it, but I don't see the merits of this digital currency that is going to replace everything.
Right. I don't either.
Especially until it has some type of insurance like
Right.
the FDIC, until it becomes stabilized. But again, when people talk about everything digital,
Something
I look at my
backing it.
debit card, I look at my debit card and say, well, this is digital. But they're talking about replacing like the entire system
Yeah.
with Bitcoin, and everything is completely, essentially you replace the USD with Bitcoin.
I don't believe that.
That's totally insane, but people like to talk about it. That's fine. I think we've seen, actually we've never seen anything like this, but it's simply not going to replace the US dollar in my lifetime. That's for sure.
Correct. Might either. So I'm still going to try to collect as many.
It's great. Yeah, fine.
I know.
You can make money on it. People can make money on it. I don't begrudge that.
I think it's just another trading. I think it's just another trading vehicle, to be honest with you.
So it's not a store of value. I can tell you that much. It's not, all these things people hype it out to be. And what did we just see? Allegedly, the government was able to recoup Bitcoin for pipeline. But we don't know if they were even to do that. I saw a lot of conspiracy theories.
You know what they say about
the hackers, if they were using Coinbase, were like the stupidest hackers in the world.
I don't believe that. I don't believe that.
I don't know. Maybe the government was trying to save face and they shook down some low-level crook and took their Bitcoin.
It wouldn't doubt me one bit.
It wasn't the real Russian guys that did the job. So,
no, that's and then right after that they hacked the meat company, and then they hacked Electronic Arts too.
Yeah, that's the thing with technology. There's always somebody smarter out there, right? At least a guard with a shotgun standing in front of the bank vault door. Nobody's going to get that money.
Correct. Let me ask you real quick before we let go. Where do you think the markets are headed in the next couple of weeks here?
I think we're going to do a slow grind higher. I think we just punched through to all-time highs today. I think we're going to have a couple of sell-offs as we digest, more information. We got earnings season coming up. Rates are going to move up. Then people are going to buy bonds and then come back down. But
so you think it just might be a circle of sell-offs back to people trying to get in at lower prices and this and that.
It's the usual climb in the wall of worry, and we'll just keep grinding higher. We'll get a sell-off, and the dip will get bought again until there is an actual corporate tax hike or some type of exogenous.
It looks like the Democrats are backing down on that too. They can't get anything passed.
So
we may be in a stagflation. Yeah, I agree. Yeah. I agree with this. I don't think the infrastructure bill looks like it's going to be a lot less than it was. Doesn't look like no Green New Deal is going to happen. I don't see tax. You're right. I think the Democrats are going, we can't do this. Now what do? We got to get something across.
Yeah, we're not going to get anything across. I tell you, that's the one thing. We lost Trump and we lost so much.
I know we did.
Of just getting stuff done, constantly getting it done. Now all we've seen is his work get unwound.
Exactly.
To the detriment of everybody.
Yeah.
I mean, the only thing that's happened is we've gotten hurt.
Exactly.
More jobs have been created for human smugglers and traffickers.
They're doing well, aren't they?
Oil and the guys building the Nord Stream pipeline, right?
Yeah.
Our pipeline just got destroyed and we lost 15, 20,000, however many jobs.
There's no doubt about it. No doubt about it in my mind that what happened in the 2020 election, I'm not going to say anything here because I don't care if my listeners don't like it or not. If you don't like it, don't listen to the show, folks. Believe me. One thing they can say about a conspiracy theory. Here's what a conspiracy theory is 6 months later. Conspiracy theories 6 months later are turned into the truth.
Yeah, every time, all of them. The Russia hoax.
When we say we got a conspiracy theory, you call me a conspiracy theorist. 6 months from now, you're going to go, "Wow, that guy was right."
Wow, yeah, it's not a conspiracy anymore.
Yeah, it's not a conspiracy theory. It's never a conspiracy theory 6 months later. So with that said, thanks folks for listening. Marco will be a guest on our show regularly here. And we're going to have Dave back on with some crypto, maybe get a little Colin back on a little again. But as of today, folks, it looks like we're just going to keep grinding higher. We'll see what this inflation looks like. But thanks for listening, and we'll see you soon. Thanks. Bye.